Great. It was awesome to hear the kind of round robin on intros. So I could help answer some of those questions before we dive into this great panel of women angel investors, and we can have some fun Q&A there. So I thought people would want to know who don't know who are angel investors, and understanding that angel investors are something called accredited investors who provide their financing with their own money. So not VCs who invest somebody else's money, but angel investors invest their own money into early stage startups. And usually that's in exchange for either a convertible debt or equity or a promise for equity in the future. And so that name of accredited investor, what is that? What does that mean? Well, angel investing is kind of a risky business. So there are rules kind of that have been made to say, okay, who can join from a standpoint of making sure you're okay if you lose your money. So there are a number of ways that you can be qualified as an angel investor. So if you have an annual income as an individual, as a gross income of more than 200K, or with a spouse for 300K for at least 2 years with ongoing expectations, that you can check on that. If you have a net worth as an individual or couple exceeding $1 million, excluding your primary residence, or in a trust situation if you're managing a trust of assets of more than 5 million. So that hurdle is one that needs to be cleared. And there are literally millions and millions and millions of people out there that have the opportunity, because they meet that criteria, to get their angel wings, but aren't aware of that. Some aren't interested. But the idea here is we're only capturing a tiny bit of those that are qualified to be angel investors, and wanting to make sure we understand that angel investing is actually supplying quite an important part into the ecosystem today. And these are the trends of the green line is angel investing seed money. The yellow line is early VC, and the other blue line is later VC. So you can see that angel investing money is a significant portion that accelerates the ecosystem, innovation, ideas. So it's quite a strategic role to be playing in the larger scheme of things. And when we think about, well, what percentage of women represent within the angel investing community, you can see this graph starts in 2004, when women were only 5%. And the latest stats from the Center of Venture Research is in 2022, and we can see that that percentage has grown to 40%. Super exciting from that standpoint to have such a rich mix that we're seeing, and it will be great to continue to be able to hit the 50-50 mark. And when we look at the rate of growth in female angels, we can see that that is significantly greater than non-female angel investors, which are on the left, and female angel investors here on the right. So that growth is super exciting to kind of keep the momentum up. And it's quite a positive cycle between angels and entrepreneurs that creates this long-term growth. 55% of angel investors were previously either a founder or CEO of their own startup. And so the increasing the number of successful entrepreneurs in the short run can help increase the number of angels in the long term. And one of the reasons that I personally think having female angel investors is important is this slide right here. because I'm not saying that this is causation, but there is a strong correlation between the increase that we see in the percent of female angel investors and the percent of women-owned businesses that seek funding. And if there's one thing that you kind of remember from me today, you'll hear it a number of times in a number of different ways, is diversity. I believe that diversity is a great way to improve many things. McKinsey kind of agrees with me here on this slide, is that companies with diverse executive teams are more likely to outperform their peers. And so that's a wonderful thing on the business side, to make sure that we have diverse teams that we're seeing in startups that funded. I also think that having diversity in the angel investing community is important, and it helps us in due diligence and how we can move forward in that community as well. So I'm a huge believer in increasing the number of women angel investors, and hopefully this information kind of helps demystify some of the things that angel investors do. So when you just, if you knew nothing about angel investors and kind of said, well, what does that mean? So if I think about three different kind of buckets of what do they do. So we meet with many founders and listen to their ideas, and usually in the form of pitches, to better understand the business model, the team, financial projections, that sort of thing. And there is a fantastic, if anybody who doesn't know me, I'm a total data geek. There's a great researcher, Rob Wilbank, and Rob would tell you that there's about 40 different founders that an angel will meet with before they decide to write their own check, which is this last thing on the right. And so in the middle is performing due diligence. And many of us that are going through SAC 25 could talk about due diligence for a very long time, because we're right in the middle of it right now. But what that means is for companies that we think seriously about investing in, we really want to uncover a little bit more and dig deeper into many areas of their business before we decide to write our check, because the relationship between the company we write a check with and the investor will be a long-term relationship, 7 to 10 years, and we on average. And so we'd like to know and make sure that our money is going to a business that we want to invest in for many positive reasons. As an angel, you can invest on your own, and a number of us who have done that, invest in groups. SAC is an example. Karen is here from E8, which is another great example in the room of people coming together to invest together and share tasks of due diligence with as well. When we think about at what time in the life cycle are angels important, I heard somebody talk about a faith-based investment. So family and friends. So if we think about it, usually founders kind of start to self-invest. Then there's government sources that they could rely on, family and friends. Angels is the next place, kind of in this sweet spot, I'll say, between the family and friends and founder investment and venture capital. And so what you find is angels are funding early companies, early ideas, exciting ideas, but not proven ideas, because they haven't really gotten to product channel fit. They're flirting with product market fit. So as we say, there is risk to the investment because it is so early. And sometimes the angel investing can stretch to kind of an early Series A, kind of within that startup space. But once it gets on to Series B, et cetera, usually the venture capital kind of takes over the cap table, and that's not a place where we're writing our checks because the check size is much bigger there. Deals happen all over the US, and angels are all over the US. So that's kind of an exciting thing. So from wherever you are, whether it be Texas or Maine or Seattle or California, you can find like-minded individuals locally. And then there's forums like this where we can come together in the beauty of the digital world across the country. So that's exciting too. So here is this name again, a demystify. And so this is a big deal for me. And this is something I wish I really, really understood better when I got into it. And so investing in early stage startups is risky. And so what that means is in your whole entire portfolio of that you're looking to invest, you would not invest everything in startups because you would more than likely lose most of that money. So typical guidelines that I've heard are around 5 to 10% of your net worth would kind of be the max of what you might want to put in angel investments within that portfolio. So I just pulled up a couple examples of numbers. So if your 1 million total net worth, then potentially you would invest up to 100K towards angel investments. If you are lucky enough to have 5 million net worth, you could go up to 500,000, 10 million, 1 million. So it is a subset to be set aside for angel investing. But the diversification piece that was really, I found important is this slide right here. So diversifying within your angel portfolio is also important because all of your investments will not make it. Some will be zombies and never exit, some will close. And so if you are looking for a return on your investment, it's important to make sure that you invest in multiple companies. And when we look at those numbers, the minimum to spread out the risk of the failure rate is about 20 plus. And so if we take that 100K that we were talking about in the earlier slide, to have 20 investments, the check size would be 5K. As a sidebar, the Seattle Angel Conference investment size is 5K for the check size. And this is specifically why if we're putting together 500K you had for investments in angel investing, then the check size could be 25K, 1 million, 50K check size, right? And so one of the reasons that I think Seattle Angel Conference is such a great on-ramp into angel investing is because the check size is small, so it's easier to write and easier to start to build a portfolio of investments at that check amount. The average check size in other groups probably starts around 25 and can be higher. So, but this diversity of your portfolio is a super important concept to kind of take hold of and understand and execute. So why do angels that I know invest? There are quite frankly a myriad of reasons, financial return being one, but certainly not the only one. There's diversification of your net worth, which you talked about. There is actually helping in job growth, local economy. About 4 jobs per angel investment are created, which is a really cool stat. And I can tell you a story that got me so jazzed about exciting in the panel. Um, you have a front row seat on latest inventions and trends, which really excites me. You meet like-minded colleagues. You can see what a warm and collegial group we have on the call today. And it's great that in the groups that I've entertained over the 10 years that I've been an angel investor, I have met so many colleagues who have become friends. It's a great community. Expanding your personal growth and learning. I personally am learning all the time. It's a great way to actually give back and leverage your experience through mentorship and startups, sharing the learning also with new investors. High energy, personal happiness, and quite frankly, it's fun. So before we started the panel, I just wanted to give you a little bit of personal insight into myself and my journey. I, for the longest time, didn't know that I was accredited, didn't know what an accredited investor was. I was working at Microsoft at the time, and John Seacrest actually came to do an Angel 101 presentation at Microsoft, and that's where I got turned on to Seattle Angel Conference, which is a place for learning by doing, and I've never left. Maybe I'm just not good at saying goodbye. I don't know. I have been an angel investor for over 10 years. I have a portfolio of over 30 plus startups. Last night, I did this analysis to kind of be able to share this with you. 10% of my investments have exited. 15% have been closed, shut down, and 75% are still active. So I look at that as a pretty good mix. I've had a ton of learning, continue doing so, and you can see meeting great people along the way. And then I wanted to kind of let you know, some of the people talk about theses, and I've invested for some pretty personal reasons in some of my investments to fuel the change I wanted to see in the world, and just wanted to share 4 of those so you could kind of get a sense of where I have invested, why I have invested, and how that actually happened. So my mom, she died of breast cancer, 2016. And so I've given a good amount of money to cancer research, but I wanted to be more focused on helping on earlier detection. So one of the companies I invested in was Miko Diagnostic, because they have a predicted biomarker test that can help choose whether women are ripe for therapy much earlier on. I was introduced to this company through Seattle Angel Conference and invested with them in a sidecar. So what that means is the group did not choose Miko Diagnostic, but there were enough people interested within Seattle Angel Conference to write another check specifically for Miko for them. Another investment that I found was interesting and actually came kind of out of the blue, I wasn't looking for it, is my dad was in a big dementia decline before he died last October, and he got sepsis. And I had never, ever heard of sepsis before, but a company came through SAC where I learned about sepsis and didn't realize how quick somebody can die from that within 12 hours. And they were creating a device for emergency room doctors to be able to detect sepsis without a lab test, to drastically reduce the time of detection and save lives. So they had come and gone through SAC, and they were not chosen, they didn't get picked. But when my dad had sepsis, it was like, oh my God, kind of a light went out. It's like, wow, I guess I didn't personally understand the impact of that so much. So they were being funded by another angel group, and I got connected with them and made that investment. Also, I am quite COVID cautious. And so there is a company that came through Zach SAC, which was Violet, and they're creating air purifiers that have just recently been proven to kill COVID, and their target market is healthcare facilities. So I was introduced through SAC. They did not win SAC, and I went on to invest directly in their cap table. So that was like an individual investment, not a group investment. And then lastly, anybody who knows me, I am total data geek. So when I found out through SAC that doctors have a hard time integrating patient data to understand trends through their patients, I thought, oh God, I wouldn't have thought that it would have been so hard. So I invested in Adaptex to help address that issue. So SAC introduced me to them. They were a finalist but didn't win. So I invested directly on the cap table there. So I just wanted to kind of peel back like an experience from an angel investor. A lot of times people don't talk about investments or how they came about. So wanted to share that with you guys so you could just understand the role that different things play, and can start thinking about, oh, okay, how does your portfolio work? Or if you're interested in angel investing and want to learn more, we can talk about that in the breakouts and figure out, well, what would you be interested in investing in? How does that work? And how would you like to do it? Do you like to do it in group or individuals or that sort of thing? So that is a wrap for my talk. And so now we can get to the panel. So I hope you guys have enjoyed a tidbit, taken away something new on angel investing, that we can follow up later with any Q&A that you might have. So John, can you bring up Kristan and Julie and Trisha and Martha? And the short intro I have is I have been lucky enough to both meet and invest with all of these great women who are on the panel. I will let each of them introduce themselves, but I'm so excited today. This is like a mini reunion. And I look forward to us being able to have a pretty open discussion. I have a set of questions outlined, but I want everybody to feel free and open to talk as long or short as they want on different topics or bring their own topics up. So why don't we start with you, Martha?
Great. Yes. I have to say it's really humbling to know all of the amazing people who do angel investing. It is a lot of fun. I was thinking about how I started, and it's not the sort of thing that I ever thought I would do because I'm a hobbit and I'm really risk adverse. I don't like to do anything scary like angel investing. But what I found in angel investing was that actually, at least for me, if I do it as part of a group, the group is a lot smarter than I can be generally. And you find a lot of things, and you can push a company to be better and to be more careful about what they're doing and help them be successful in a way that they wouldn't have been otherwise. And so actually, you're supposed to invest in at least 20 companies. I think I've invested in about 50 companies, and it has been more than profitable. It's so when the money comes back, I always think, oh yeah, let's do it again. You know, this is exactly what you should not do if you're a gambler, right? You know, when you win, then but except for that, even if I lose, I like to think that I'm helping things get better in the world. I like to think that, I mean, as Elaine has talked about all of the people she's invested in and why she's invested in them, I feel like, you know what? This is a company I feel really good about, and I hope that what I've done will help them do the next stage. So it's not exactly gambling.
I'll jump.
Awesome. Go, Julie.
Hi, I'm Julie Schlosser, and it's so nice to be back with this crew. I could sit through Elaine's presentations a zillion times and it doesn't get old. I love it. And I always learn something new. So I really appreciate the work you put into it. And I love the exercise at the end where thinking through the meaning behind each investment. It's something I kind of want to do as an exercise myself. I think that would be good to reflect on. So my journey into angel investing is somewhat circuitous. I started my career as a financial journalist at a magazine in New York. And I like to joke that I was an armchair venture VC. I would go and look at companies in Silicon Valley and drive down Sand Hill Road and invest, or not invest them, but write about them as cool future companies to back. And I wasn't putting any money behind them, but I was putting ink behind it. Then I started my own company and I realized, I don't know how this works. I don't know how to get funding. And when I paused that company, I had also stumbled into SAC. I had gone to Microsoft to one of the final, I don't remember which year it was or which session it was, but I went and watched one and I was like, sign me up. I loved everything about it. I think Elaine and John both spoke. And then that was about a year before COVID, and I did 2 rounds, and then the world shut down. And I think SAC really helped me get through COVID. It was something exciting to log on for, and to see the future and something beyond the news headlines, and to be thinking about investing in these companies that were tackling important issues. I think kept a lot of us going. So I'm grateful for that. And I have to date invested in about, I'd say 20 to 25 companies and $5,000 to $20,000. And the one thing, I'm now running a nonprofit, a female leadership nonprofit called Journey to Lead, which I love. It takes up way too much time though. So I haven't been able to be part of SAC, which is the only downside. And I haven't really been able to track, as Elaine just did, too deeply. All I know is I think I've only had one company kind of go under, and the rest are all still going. So in it for the long haul. I wish I had more time to get engaged with each of these companies. I was spending a lot of time helping the founders, and that is super rewarding. So one other thing I just want to mention, we'll talk about this more too, is risk taking. I think it does teach us, especially for female leaders, to take these small risks. Like SAC is a good way to kind of take these baby steps. And I think as a leader, you know, we talk a lot about women getting on boards. I actually think we learn a lot more with women investing. So I think it's just a great way to develop your leadership skills. So I will hand off it. I'm excited to dive into some of these issues in more detail and learn more from you guys.
All right, Chrisanne.
I'll go next. Yes. So thank you, Elaine. I'm a software engineer by training, and so I consider myself a data geek. Nowhere near to your level, but I love hearing from you because you do such amazing analysis. And I guess that's, you know, we mentioned this, but this is what, and Martha talked about it too, like this is what I get out of investing in a group, is that it's the diverse thought, right? People will come up with things about companies, you know, risks or, you know, rewards, challenges, opportunities that I hadn't even thought of, because I've got this group that is helping me think through a company. It was funny in the show her the money they were talking about, people getting started in crowdfunding, and I went, well, okay, that's where I started, because I started in a crowdfund investing in a woman founder who was creating, I think it was one of the first like period trackers or something like that, right? So I was like, oh yeah, you know, I'd like to see this idea get out, and like all of you, I didn't know anything about angel investing. I thought the only way that you could invest in a startup is if you were a VC. And so I started understanding angel investing because I have my own startup, and I thought, okay, what better way for me to learn how investors think than to join an angel group? So that was sort of my way of being a mole and getting in there and sort of understanding the way all this worked. And then, you know, like the rest of the women on the panel, I just fell in love with it. And I only have, I think, 5 investments under my belt, so I'm sort of new on my journey. I have, between my kids and my nieces, I have 7 daughters and 2 non-binary kids. So, and these guys are out to change the world. So for me, this is also my way of helping them in that journey, helping them to sort of think about ways that they can make a bigger impact in the world, because I believe that business is the biggest force for good that we can have. And I personally, I guess, because we've talked about diversity and stuff, I've been also on the journey of really looking at AI and bias in AI and how we can ensure that we're creating a more equitable world by looking at that. I was one of the first cohorts of AI for Good, which was a startup program last year, and I'm challenging myself this summer to actually look at applying AI into climate change. John recently said, well, you know, Christiane is an impact investor. She looks at environmental, and like, well, I'm actually an ESG investor. So I like to look at environmental, but I look at social, and I also look at sort of governance and how we can think about ways like bias and AI to, you know, govern to have a better future. So that's what I hope, I'll post my link in the chat, but I also would be happy to have any kind of one-on-one conversation if anybody really wants to explore this, because having more women investing in companies, because we know and understand the problems and the issues that women are facing, is super important. So I'm gonna hand it over to Trish.
Awesome. Hi, everyone. I'm Trisha Lowe, and I am also fairly new to angel investing. And I think you're hearing like there's a lot of different paths to get there. I will say, I feel like my path makes sense in hindsight, but in the moment, it felt totally chaotic and not at all strategic. So if you're in that situation, you're in good company, or at least I like to think you're in good company. So professionally, my background, I'm a trained business analyst, and a few years back had left the Fortune 500 world and went into the startup world, and sort of what Julie had mentioned was on the other side of trying to raise money, and realized I didn't know a lot about that, and I had to learn it very quickly, or else my company that I was part of would not be successful. And kind of parallel pathing to that, my husband and I had some close friends who decided to strike out on their own, who we were like, yeah, you're brilliant. Okay. And we got a chance to participate in their friends and family round. So sort of that faith investing. And as I started to learn more about fundraising, being on the startup side, thankfully, a couple of our early faith investments were also on that trajectory and started to have a lot of success. And I think folks have talked about it being fun. And I think that was what really motivated me to want to do more of it. So, being able to call up the friends, or they're calling us and asking for feedback, asking for advice, for strategizing. Like, I found that really rewarding, because it was people that I cared about, and I thought the work that they were doing really mattered. And so around maybe about a year ago, really, my husband and I were like, okay, we're going to do more of this. And we didn't know where to start. And so we started going to these pitch events that I don't even know, like Meetup, Eventbrite, LinkedIn, just random. It was all over the place, and ended up making 2 additional investments in sort of AI space, but totally different companies. Like, one is B2B, big data. The other is B2C, sort of more in like career services. And we sort of sat down and we're like, okay, this has been fun, but also we are lacking any kind of thesis or strategy here. And we wanted to go about it in a little bit more of a structured approach. And that's actually right around the time some folks that I'd been meeting multiple people had mentioned the Seattle Angel Conference. And so I kind of was like, wait, this sounds like it might be a good fit for helping us develop a thesis and be a little bit more structured, as well as just getting exposure. Because I think when you're first starting off, you see a pitch and you're like, oh, that sounds cool. And then you see it, but you only have so much money, right? And like, you're only wanting to put so much of your wealth towards this. And so being able to get a view so I'm participating in SAC right now. And I foolishly signed up to be a due diligence lead, which has been a great learning experience. Thankfully, Melody and the other folks on my team, as well as everybody else in SAC, is super helpful and like willing to share, here's what we did, here's what we learned, here's what questions we have, here's feedback, all that. But I guess the point I was going to say there is like, it's been really cool to see just a breadth of companies that I think my little like opportunistic wait for our friends to start companies, as well as my haphazard like go to a pitch event because I heard about it approach, were not really providing, and has really helped refine the thesis around like, okay, we want to do things where we feel like they're table stakes as they're having a positive impact in the world. And then like secondary for us is it an area that we actually can add value? Because I think that's one of the things that for us makes it really fun at the early stage, is being able to, you know, feedback is a gift and you can toss it out the window, but a lot of these early stage founders, they want that feedback. And so is it an area that either we have subject matter expertise, or that like our particular strengths, like mine in financial analysis and customer research, are going to be useful? Yeah, so that's a little bit of the whirlwind. And I think if it sounds chaotic, it's because it is and probably should be. So don't let that scare you, is my takeaway. And 5 investments, 1 has already failed. It did not make it far, which is great. Maybe that's, you know, my failure, but working to get up to a more diversified portfolio for sure. And right now they're a little bit all over the place, a lot of medical related, med adjacent, and then AI I mentioned. And then we'll see the 6th investment, where it'll land. It'll either be medical or kind of industrial climate tech. So both of those I'm excited about.
Oh, that's awesome, guys. Thanks for sharing kind of how you first got into angel investing and your pathway. That's awesome. Can you guys kind of all think back, Trisha, this won't be as hard for you, but can you guys think back to when you kind of your early experiences and how you felt? Like I'll tell you, I was excited to learn something new, but also I was very unsure of myself and didn't have a lot of confidence that I personally would have what it took to give feedback, or if I had enough knowledge or experience. I'm certainly glad that didn't stop me from moving forward, but if anybody else can kind of relate to that, that might be good for attendees to hear, that it's not an inherent skill that you feel comfortable over time.
Well, it's not hard for me to remember, because I also feel like I'm still feeling this. But yeah, I don't love the phrase imposter syndrome, because, you know, for many reasons, but I think that up and down of like being really excited and then all of a sudden feeling like I am in over my head and what am I doing, is very much a real thing. But the way I was mentioning before about the fun, and I have this like really core value that there's no such thing as failure, just learning. So every failure you make, like, that's great. That's one more thing you learned, ideally. And then hopefully when you have amassed some learnings, that means you also have more successes. And so I think for me, like having that mindset, and then also meeting a community of people who've been really transparent about like their own feelings and challenges, has helped me get over that. But yeah, total like ups and downs of emotions, and still going through that.
So as I said, I'm really risk averse, and I was at a meeting once, and I was talking to the fellow next to me, and he mentioned how he had lost $8 million in angel investing, and I know, I was like, whoa! And I know another couple who put in like a big chunk of their retirement, and they lost it all, and so yeah, maybe he didn't learn from his failures. That's good. So. I kind of came into this kicking and screaming, and I still to this day, when I invest, I assume I'm going to lose everything I've invested, and that makes it easier. and then I can relax more and have fun. I also like the, if you do it with Seattle Angel Conference, then it's just the $5,000 and it's not that much of my wealth. And I figure, I can lose $5,000. It's not that big of a deal. And so once I've invested, the way I do that is then the money's gone. And so I have fun with the investment. I have fun. I really like working with the teams. Again, with Seattle Angel Conference, you're working with a team. You get to learn from other people. You get to learn about the business. This round, I'm doing glass. I didn't know anything about glass, or I had no idea what I didn't know about glass. And now I realize I didn't know anything about glass, but now I've learned about it. And that has been so fun and so interesting. And, I mean, I'll go to Europe for $5,000. Why not invest and have a chance of a return?
There's a guy in our angel group this time who is new, and somebody will flash up a spreadsheet or something they'll work on, and he'll be like, wait, you got to show me that. Like he's like the just, and it's so great because he is so willing to put himself out there and to say, I know nothing and I'm trying to learn. And I see myself in that. Like that was exactly, except I was too shy to say, hey, wait, but that sort of sort of drinking from the fire hose. There's these guys all know so much more than me. And so like you said, do I really even have anything to contribute? And I guess that's part of the reason why I like being part of a group. Investing on my own, it feels a little bit more, it all, the buck stops here, and I still don't know that I know everything. I don't know that I ever will.
And I'll just add one thing. I mean, I think switching to online has changed it. My first few events were in person, and it was a little awkward with like, hello, my name is badges. And I think Zoom just changes the game, and being able to just jump on, and if you need to go off screen, or if you don't want to participate, you could kind of pull back. The downside is you don't get to engage, closely in person. But it's such a warm environment, and you'll see leaders who are ready to sit down and help you. So, there are no dumb questions. So you'll be comfortable by the second meeting.
And so, Christine, you brought up the idea of investing by yourself versus group. So I wanted to throw out the question: have you guys invested in other groups or as an individual, and how were those experiences for you? And which do you kind of gravitate to, do you think? If you have more than one experience have had.
Yeah, I mean, like I said, I've only done sort of, investing $100, $200 here and there in various crowdfunding. I haven't invested more than that because I found a group and went, okay, this just feels so much. When I'm up 10x, I really would like to have that group behind me.
I think group is way better too. If you're working full time and you don't have time to track, and you could just, there's someone else who is focused, and you could call them and ask them their input. The group is just a lot more fun and better resources.
It kind of goes back to why you're investing, right? So if, like, I really want to invest in the big ideas. I want to invest in the people. Like Martha, once the money's left my hands, I don't really feel like I'm sitting there, waiting for a return. I'm investing in the team and saying, yeah, right. I'm investing in the team and saying, okay, I believe in you, and I believe you're working on this mission, and I really want to support that. And in which, for me, requires doing that due diligence, and I want to be involved in that due diligence. And I've looked at other ways to invest that have been like, okay, here, we'll give you a diligence report maybe, or we'll just propose or recommend who you invest in. And that was not comfortable for me. I needed to know a little bit more about the mission and the people that I was investing in.
I was just going to add, our first 5 investments were all as individuals, right? So like on the cap
Okay.
table. And I think one thing that's maybe challenging about that is a lot of times companies do have like a minimum investment
Yeah,
amount.
yeah,
And
yeah.
so I think for me, being on the cap table makes a lot of sense if it's an area where we are going to be really strong advisors and heavily involved, hopefully heavily involved as an investor, but like we're going to want to invest in future rounds. We're going to want to be giving a lot of advice. I think on the group side, it's really beneficial in terms of diversifying our portfolio, of being able to potentially access multiple investments. You get to pool your funds. And then echoing the comments, like, especially if it's an area that I'm not particularly well versed in, it helps to have that group available to support the diligence. And the other thing is, I'm finding that the companies that are coming to groups, at least in my one experience, are also like really eager to get your feedback on their business, their presentation, et cetera, along the way, even if your background isn't necessarily in their area of expertise, which is a little bit different than my personal experience when we were doing sort of on the cap table as individual investors, where they wanted our advice if it was like an area where we were domain experts. And so it's just like a different thing of like, if you want to be really involved in that diligence, and also it almost sometimes feels like you're coaching the company that is going through the conference, then I think the group can be awesome. That also can help you have confidence in like the diligence that's being done, get the exposure, et cetera. I think if they're really areas that you are very passionate about that you're going to want to be involved in, like those are times where maybe it makes sense to be an individual, but just realize your resources are going to be stretched there, both financially, your time, all of that fun stuff.
Something else that came up this round, when we started looking into the company we're doing due diligence on, I kind of got the sense from them, they said, you know, SAC, yeah, you're okay, but we're not that interested in you. But when they started seeing how careful we were in looking at them and supporting them and saying, hey, you know, you could really represent yourself better like this, or that you've got this hole here, how are you going to defend that? Then they started getting more and more engaged, and it's like, oh wow, you know, you guys are really helping us. So even if they don't win, and even if they don't, well, maybe not this company, but another company, even if they don't succeed with that particular idea, what they're learning from the group experience is helping them to go on and be successful with another similar idea or in a different area. And I think it's very powerful in terms of supporting people who are innovators and who want to go out and change the world, even if you don't make money, although I am making money, which is also good. So it's another way that you are helping the world, and another way that you are encouraging people and helping them be smarter about how they're doing what they want to do.
Yeah, Trisha, I'll jump off something that you said when you talked about time as a resource. You know, that Rob Wiltbank says for in due diligence, you should spend about at least 20 hours. I know collectively in our due diligence in SAC, we've kind of usually do more than that. But if you assume in that funnel that you look at 40 different companies before you write one check, and you're doing 20 hours a piece, you know, I just personally don't have the time to source my own deals and deal flow at 40 to get down to the one and all the due diligence. And then quite honestly, I don't know enough in all the different areas that you need to kind of peek at through due diligence. So I have done investments on my own, but I also feel that has been a better and more complete experience through SAC. And I don't know if you noticed, but on some of those where I was directly on the cap table, I was introduced through SAC. Most of those were finalists. So they had gone through due diligence. They might not have just won and gotten the big check, but there were definitely people that we're doing the work as a collective, that I really benefit, because I also benefit on the different ideas of, well, what do you think their weaknesses are and strengths, and and that sort of thing. Also, I did, Christan, kind of teeing off yours, I did one round in the Seattle Angel Fund, which was kind of used to be a graduation kind of group coming out of Seattle Angel Conference. They changed their name to Sea Change, and it was organized differently. And it was, I felt, a little bit more passive than I'll call Seattle Angel Conference, much more roll up your sleeves and active. And I found the passive experience much less satisfying, because I didn't know as much about the companies and really wanted to know a little bit more, to write that check. And then, kind of as Martha said, part of what I enjoy is the back and forth with the different companies themselves, giving input, seeing what they have to say, that sort of thing. And didn't have that experience either. So that's why I guess one of the reasons I'm kind of saying is why I've stayed with the Seattle Angel Conference for so long. It's kind of, I've gone out and tried other things, but this kind of unique grouping of people and the ability to do what we do, kind of highlights how I like to invest. It's probably not for everyone, but we can see some of the pluses through this discussion. So what are, I went through that whole list of why different people invest. What kind of resonated with each of you? Because I think our attendees today would kind of like to see if there's anything that resonates, that they feel is, that they connect with, that would be great to hear what you guys connect with from that side of things.
I had a very memorable moment where I realized, oh, I'm going to do angel investing. We'd already made a handful of investments, but I was listening to a panel of angel investors talk, and one of the panelists said, I kept coming across all these early stage startups, and I thought, man, I want to work with these guys. I want to work for these guys. And that obviously you can't have that many jobs at the same time. And he's like, so I figured out that angel investing was a way that I could like be a part of it. And for me, that just really clicked. And I think it's, yeah, of course, ideally we grow wealth, but I think it was that combination of, it'd be fun to be a part of this. And also I care that there's a successful outcome here. And I love what Martha said, like maybe that successful outcome isn't actually this company's success, but I do think they're going to move whatever it is they're working on forward, and that these founders are likely going to have a success, if not multiple, at some point in their journeys. And so I think that was the piece to me that really like switched it from this idea of, yeah, if we've got friends who are doing something, sure, to no, let's go be deliberate and like make this happen and make this a part of our like family strategy.
Yeah, I think that's really, so we invested in Jane from Harvest Thermal, and we invested in Cath Connect. And I see them post things on LinkedIn, places they're going and awards they're getting and progress they're making. And I'm like, yes, I was part of that. Like, I'm so proud that like I was able to contribute to that, and they're doing these like amazing things, right? So there is definitely that sort of, it's a pride of ownership, I guess, is what it kind of comes back to. And you do kind of feel like you're in the know, like, oh, I thought that was a good idea, and look, it's going, right?
And I'll add the lifelong learning aspect. I mean, there's parallels to being a journalist if you don't have a specific beat, which is what I was. And so you're constantly ramping up, and you have to maybe not become an expert, but become very knowledgeable on something new. And you're just constantly learning new things. So especially going through SAC, where you're seeing like 40 companies. So you're quickly reading up on them, and then you're going deep on one. It's just really good for your brain. So I'll add that.
Mm-hmm.
Awesome. So is there, if you think about it, is there anything you wish that you knew before you started. I'll key off and say, wow, I wish I knew about K1s.
I'll second that, although they're kind of boring.
But you have to be aware of them for your taxes, so it's important to know.
Yeah, so K1's team is the reporting that you get yearly that you have to file with your taxes, and the more investments you get, each one may or may not have a K1, and you have to you have to keep track of that and that sort of thing. So it's just something that no one tells you up front, but it is an important thing to keep track of.
I think if someone had said to me at the beginning that think of it like education or entertainment rather than investing, that would have been easier for me to get past the barrier of this is really risky and be able to just enjoy the path and enjoy the process.
I wish I'd known that angel groups were a thing. Like and also that there were opportunities to do angel investment at a lower dollar amount. I think that is something that I just didn't know. And maybe that's again coming from being at doing Series A fundraising, Series B fundraising where the amounts are so much larger. I just didn't even know that was an option. And kind of wish I had, because then I'd probably have more companies in my portfolio.
Exactly. Like that is a big deal for me. Yeah. So glad you brought that up.
And my first exposure to angels was when I had my startup, and we were talking to a few angels, and they were like, yeah, we invest in women founders. And then they would this couple would come on the screen, and, the guy would be like right here and his wife would be back here, and he would do all the talking. And I thought, okay, what's going on here? Why, and so for me, that's kind of what I thought angel investing was about, just yet another extension of the old boys network and, whatever. And then, so I was very pleasantly surprised when I got involved with Seattle Angel Group, because I'm like, okay, wow, there are these really powerful, smart women in here who are, leaning in and providing their expertise. And so for me, it was definitely, I don't know. I tend to shy away from places where I don't see, I'm very much a feminist, right? So I don't see that the equality is kind of coming through. And it's not just women. I mean, we've also seen a lot of diverse investors come in, and it's really exciting to be able to work with them.
I wish I knew about angel investing sooner. And even if I wasn't an accredited, in college, I wish there was exposure at a younger age. That would be super helpful.
Right.
And I wish, and another thing is that these investments take a long time. And I think it just recently dawned on me, I don't know if I'll ever see returns from this. So you get into the excitement of the round, and then it's a long road ahead.
7 to 10 years on average. I don't think I knew that kind of as much as I should have going in as well, Julie.
Just to be clear, at the state that we're investing, 7 to 10 years is overly optimistic, and that it's more like 10 to 15 years is what we should expect from Seattle Angel Conference companies, because we're investing so very, very early. And when we talk about learning angel investing early, we have 2 recordings on our YouTube channel about being an impact venture capitalist using donor advised funds. And so it's possible for unaccredited people to fundraise and angel invest without using their own money, and build the skills and build the relationships that when they get accredited, they then can do stuff. One of the ways to be accredited is to start your own venture capital fund. Another way to be accredited is to earn some money. But there's some other things we've done there. Sorry to jump in.
Oh, no, that's great, Sean. Thanks. And so let me ask, if you had advice to someone who would be new to angel investing or thinking about angel investing out there, what would you tell them?
I mean,
I'll go first. And I would say that the size of check matters. And learning environment for a friendly on-ramp so that you will want to do it again and have the multiple investments that you need, I think is pretty important. Julie.
I was going to say something similar. But I mean, I feel like I'm a plug for SAC, although I haven't done it in several rounds. So I'm like the outsider here. I would advise them to do it through a group like SAC. This is like this is an easy on-ramp. I can't think of anything better.
Teresa, what do you want to say?
Oh, thanks, Martha. I agree with both Elaine and Julie, but I also want to add that we should look at it, as Martha mentioned, that it's a fun entertainment activity. And then the reason why is because a lot of us we're type A, hard charging, high achieving people who are really into our jobs. And I feel like angel investing is actually an outlet that's healthy, and it actually does something for us from a wealth generation standpoint. And a lot of activities, it's not like drinking and playing golf, which are okay, but this is much more healthier because you're also meeting of the minds with people who are, like, for example, I learned a lot from Kristan, just from the healthcare perspective and her viewpoints. And I would never have met her without SAC as a venue. So I guess the base point is look at it as a fun hobby, because when you start thinking of it as fun and an outlet from your regular work days, which are super stressful, it can actually be another nuanced part of your life, which also can make money for you in the next 2 decades, right? And also the fact that Elaine said and Julie said this, it's really important in the beginning to belong to a fun group, because doing it by yourself is a lot of risk, and the due diligence part is a major part of not losing your shirt, I think.
And I'll add to that, because all the studies that have come out recently on longevity, right? It's those social relationships. So building that in, either if you're local in Seattle and building out relationships at a time when we're all working really hard on other things and probably not getting out as much as we would before Zoom. So the health benefits of SAC.
I'd echo everything, but also add, I think, like, have a little more confidence in yourself, and also don't be afraid to trust your gut. Like, obviously you do diligence and you do that for a reason, but I think especially because these companies are so early stage, there's often not that, I'm a data person too, and there's often not the data that you want or that you even really like need to make that kind of decision. And so that's where, like, being in tune with the fact that your gut is telling you something, and that is data. So that's something that I think is easy to discount, especially as women. And don't discount it. Like trust your gut, and also have confidence in the fact that maybe you don't know something, but the fact that you might ask a basic question that seems basic to you is going to actually reveal something. Like, how well does that founder actually answer that question? Can they explain it to you? Like, there's a value in that. So don't discount that.
Yeah, and I think going on top of that, think about it not as, investing in this nebulous sort of thing out, this nebulous company or nebulous idea, but investing in people. And I think that it's really fun to think about it in terms of, Julie talked about like building community and relationships, but investing in people, right? There's lots of studies that say that our social networks is what keeps us happy and engaged, and that's the key. So I think you know, when I first started, I was thinking I was investing in companies, but I'm not. I'm investing in people and the founders and in what they're doing.
That's great. Elaine, can I ask a question on the data front?
Always. I can't say I'll always know the answer, but you can always ask the question.
Well, that 40% seems amazing and seems really optimistic, or I don't know, I mean, you're pretty confident in that. Why would the numbers in venture be so bad for women still at this point? I mean, we hear and read, you know, the 2% of funding going into women founders and 0.4 going into women of color. What are your thoughts on why that number, in fact, I think it went down in the last year. Like, why aren't those budging with all these female?
You know, it's a great question. I am buoyed by what I see in the microcosm here in SAC. So if we think about Karen Kidder, are you still on? Is she still on, or did she have to hop?
No, she had to drop off.
Get hop. And if you think about Yoko and Minda, that once, and this is part of the reason, Julie, why I think getting women in angel investing is so important, because I do think there are many paths that you take after your one or two kind of first experiences. Some of them are to stay here, but some of them are also to leave to different angel groups. Some of them, like we heard today, that Jessie is going to now take on fund manager for SAC 26, which is fantastic, Jessie. So excited for you. And then the question is, where does that take Jessie, right? And so then she is more equipped to go out and do bigger and larger things. So I do think it's a longer term thing, but I believe the more that we can. Oh, and Christine, so you're going to also co-fund. Oh, fantastic. So who knows what other cool things you're going to do.
Yeah.
So I think having that broader base, and the 40%, I honestly have to say that seems very aggressive to me too. It's from the Center for Venture Research, but I have not seen 40% across the board in anything I've done. But what I get excited about is that trajectory. The trajectory that we are seeing is up and to the right each and every kind of year for more women participating. And the more we talk about it, the more we excite the women on this panel, the more we excite the people who are attending, the more hopefully we can gather steam and have a larger impact and presence. And I'm more of a positive person than a negative person, so I want to think about it that way, in terms of how we can change those very depressing numbers that we're seeing in venture capital. And right now, the other thing I'd say is money is tight out there. People raising money know about that, but venture is tighter than angel money right now. What the metrics they're looking for their round, for them to get in, is higher and higher than it was 2 or 3 years ago, potentially rightly so. But what is keeping some of the ecosystem going is what's happening in the early stages. So investing in angel investing is super critical right now to me for many reasons. So great question, Julie. Do anybody on the panel have other thoughts or ideas on that? Okay, well then let me ask you guys on the panel, was there any question or anything else that you wanted to say as a message to make sure that we got out today before we open it up to Q&A from the audience?
I want to hear their questions.
Yeah. I mean, the only thing for me is if you want to talk more about Seattle Angel Group and you know, how you can get involved, I put my LinkedIn in the chat. You know, we can set up some one-on-one time and get explore sort of ideas that you have.
Fantastic. And kind of just as a complement to that, I know that our Seattle Angel Conference 25 final event is next Wednesday. If anybody would appreciate seeing what a final event demo day looks like, seeing our 6 finalists pitch, and understand how exciting that environment is, please reach out to Kristan, John, or myself. We can hook you up and help answer any questions you might have. But if you have any questions from the audience, please raise your hand and John can call on you, put them in the chat. Anything that you would like to ask is up for grabs.
Cool. What would people like to ask?
Is
Yeah,
everyone?
Margot, go ahead.
Hi, thank you all so much. This has been really interesting. While this doesn't lend to diversity in the portfolio, I'm curious just around like the amount of time spent on due diligence, whether it makes sense to have like a focus in your portfolio based on your experience so that you know like who are the customers, what are their problems, like what's the competitive landscape, so that you're not like starting over every time.
That is a fantastic question, and I know you've heard that Rob Wilbeck name a couple times from me. So there's not a ton of research that's done on angel investing, but there are a couple things that they say bring a better outcome. One is to be able to do enough diligence, that 20 hours per investment, to make sure you know enough about the company to understand if there's a there or if there's something that's really unsettling. The second thing is to be able to invest in an area that you know something about. So for me, that's another reason why I invest in a team, because I certainly invest with a team, because I don't know everything about anything. Like I'm on this diligence team with Martha, and I knew nothing about Windows before 6 weeks ago, but now I can tell you, man, vacuum Windows, and great things to do about seals and everything. Great. So I think if you are investing alone, having a thesis around things that you know and can touch is a great thing to help you. If you have the ability to invest in a team, it gives you a wider aperture of things that you can put in your portfolio from a diversity perspective, I believe. Anybody, other panelists want to jump in on that one? John?
Along those lines, I actually prefer to be on a due diligence team that I don't know anything about. It's probably more risky, but then I get to learn more, and so if what I'm doing is for fun and for education, then for me, I try to actually stay away from things I think I know too much about.
Too. I think it's more fun.
Yeah, not that I know much about things, but.
Elizabeth wants me to admit that she and I are co-investing in a robotic strawberry picker of which we knew nothing about.
So there are things called SPACs and there are things called SaaS, and you invested in a SPAS. Strawberry picking as a service.
It's also interesting if you know too much about things. So we actually had this thesis that we would have a lot of health investors come in, and the target might be physicians or nurses or people who were totally in the space. And what sometimes happened was that people would say, oh, we'll never change the way we do things. That's not done this way. And so there was a feeling a little bit that being too much familiar meant that you were so entrenched in what you were doing that you might not actually change the way things could be done. And yet when some really creative ideas came for how to actually do things differently, people all of a sudden went, oh, well, of course, that was a good idea. I go, wait, you were in that due diligence saying this is never going to work. It's never going to change. It's never going to get reimbursed. The patients aren't going to like it. The docs are not going to want to do it. And yet, that's how things happen, because someone comes up with something that is not status quo. I facilitated a session yesterday, which was with NSF, which actually funds bold, brilliant projects that are super risky, and that's their thesis. Don't come to us with anything that is actually already in the market. We don't want any tweaks. We don't want any little process. I worked for Ernst & Young many years ago, and one of our service lines was business process improvement. By no means was that innovation. It was a little bit of tweaking things to get a little bit better. So that's not NSF's thesis. And they said, we really want you to bring the ideas that are risky with us. And if you are good at advocating for this, then we can actually work with you. If you need to pivot, we'll help you pivot, because maybe, and he gave an example of a company that really thought that they actually wanted to float blimps up in space, so that they could actually do some climate change analysis. And they realized that the cost of the fuel went sky high at that period of time that almost sunk the company. And so what did they pivot to? They actually pivoted to become a telecommunications receiver. And so they had the technology of how to actually assess things. They just were applying it now in a different manner. So I wanted to give that as an example, because that's one of the things that by seeing all these different companies, you can actually bring to the table and say, hey, I don't think it's going to work in that solution. Maybe it's going to work in this one. So I think when Martha said, I prefer to be on some places that are slightly different, that's because you don't let your a little bit of fixed brain bias stay on that. So anyways, I'm in Pennsylvania to celebrate, and my daughter, she's just brought me a fresh banana muffin. And I'm going to say goodbye to you all and hope that everything goes well. Anybody want to reach out to me? I put my LinkedIn in here, and I've really enjoyed the talk. And I have to tell you, Julie, I love seeing you, because I haven't seen you recently. It's nice to see you.
You too.
And all of you, so keep in touch. I won't be around next week because I'll be flying back at the middle of SAC. But take care, everyone, and keep in touch. And Andrea, you just this is what Ryan went through when we all asked him questions, and we said, hey, I don't know. And I went next door and got my neighbor, who actually retired from GE in the ultrasound area, and said, I want you to come alongside this guy because he really needs your expertise. And so she came along and gave him, from the really practical, I've been selling GE ultrasounds for 20 years. And if you're going to go sell, these are the things you need to consider. So that's what we can bring as investors and as founders in the space. Thanks, Elaine.
Elizabeth, thanks so much for
Thank
coming.
you.
Give your daughter a big hurrah from all of us.
To you again. Hopefully in an investment, we'll be doing due diligence together.
I love it.
Okay, bye-bye.
Bye. Are there any other questions before we all hop?
Yeah, I have a question. As I heard, everyone seems to recommend SAC as a sort of a stepping stone, right, or entry point investment. So what's next, right? Like, I wanted to hear, what are some of the alternative group investing vehicles, channels, Elaine, it's still SAC, but
let me set my frame on the conversation. There are 6 ways that people invest in angel investing, just in terms of structures. They can be cowboys, where they invest their own way and they don't listen to anybody else and they just go do what they're going to do. And then there are networks, and 95% of them are networks, which is You run a screening committee, you gather companies, you pick 3 out of the 50 that applied. You individually, you have a lunch, have some nice food, watch the company's pitch, throw them out of the room, see if anybody else is interested, do a due diligence team, and invest individually. Or you could have 4 funds, passive funds, managed funds, active funds, and event funds. And funds are things where money comes first. We commit the money and then we make the decision. And then the choices are the 4 different ways we can make decisions, right? We can make decisions because every time Joe invests, we invest with Joe, whatever Joe did. That's passive fund. It's just algorithmic, no due diligence. We can do managed funds where Joe's the general partner and does all of the decision making, and we just give him money, which would be a great for someone like Julie who wants to angel invest but doesn't allocate enough time for her to do the due diligence, enough for her to feel comfortable, kind of thing. And we have a bunch, like First Row Partners is a managed fund, which is angel investors as LPs, and then the general partners are the ones making decision. You active funds, which Venturous is going to try to be, and which Oregon Angel Fund started out as, which is everybody does the work. Everybody finds a company, everybody does the sorting and shifting of the companies, and everybody votes on the final thing after everybody does the due diligence. And then an event fund is like Seattle Angel Conference, where we're an active fund, but we have a deadline, and that sort of twists the process along. The problem for people is 85% of people who can angel invest and are accredited by SEC laws are below $5 million. So my answer is that if I'm going to take 10% of my net worth and I'm going to burn it on angel investing, it's better for me as a 5 millionaire to be writing 25K check or 5K checks instead of 25K checks. And so everything below 5 million in my mind should be more and more 5K checks, or maybe even smaller than 5K checks and bigger groups. And so in that process, when you go to a network and you're making individual decision, typically the companies want a minimum of 25 or 50, and you just can't, as someone below 5 million, do that very well. And so you have to come up with a group structure that will make that go. So we have in Seattle, Grub Stakes, which is sort of quiet right now. We have VAN, which is the Virtual Angel Network, which is all virtual and trying to be nationwide. We have E8, which Karen was here, which is climate tech oriented. We have
AOA.
We have Swan, which is the Swan Venture Group, which is sort of in the middle. I'm going from the bottom to the top, sort of thing. We used to have Puget Sound Venture Club, but they have merged with AOA. And we now have Venturous coming in that middle spot where they're going to be writing the $150,000 to $300,000 checks as a group. And then we have Alliance of Angels, which is sort of the big one at this point. And then we have Kretsu Northwest, which is writing more checks, but they're like across 7 states, and they're a very hyperactive thing that is their own thing, and they tend to drift towards Series A level investments and not down at the bottom. And so Elaine has a video, which we should go highlight on our YouTube, about the different angel groups and how they're investing over the last 10 years. But given that context, then Jesse, you might find that the investment path locally is inside that box, or it might involve micro VCs like First Row Partners or Untapped Ventures or Ascend or Essence. And we have maybe as many as 12 of those micro ventures. So, but if you want to be an active angel investor who's writing checks that are below 5K, then that means you're in Seattle Angel Conference, or you're part of Venturous, or you're creating a new thing.
Is Fludge still active?
Pledge is not active, it turns out. I just talked to Looney this week about that.
And John, at the event
But-
next week, I will be going over that list and how the sizes are. So I'm excited to
Oh,
do
very
that.
cool.
Jesse, I think that might be informative too.
So we used to have a group which was called Wings, which was a med tech, did medical device stuff, and we want to put that back. But to put it back, we need to gather a bunch of group-oriented health investors, and we find that the sales cycle for angel investors that are new and interested in health and willing to do the work that is the deep work on health it's just a very long sales cycle for us. So, while doctors may have a lot of accreditation money, they don't have a lot of time, and so don't want to generally sign up for being active people in a long project like we do. We also have been talking to E8 about doing a climate tech angel conference.
Mm.
And so we can do specialized ones that build capacity in groups. And we have a reasonably large number of wannabe fund managers that are opting towards micro VC funds. And there are things like VC labs, venture capital labs that Founders Institute started, which is a 12-week sprint for getting your fund up. And 500 Global has one, and who's the other one? There's one out of
While you're
Berkeley,
thinking about that,
Hustle
I
Fund.
want to tell Tricia, thank you so much for coming. She has to hop.
thank
I really
you.
appreciate you being part of the panel. This has been such a wonderful event. I don't want it to end. I know it has to, but the time was so well spent. Thank you all for coming.
Thanks for having me, and
Thanks.
hopefully I'll talk to many of you again soon. And sorry, I have to dash
bet.
early.
You bet. Okay, go ahead, John. Sorry, just wanted to make sure we
The
said a
other one
proper
was
goodbye to Tricia.
Hustle Fund. I mean, there's some famous ones that are pretty broad and advertising wide. For Precious, if you have a bias towards Nigeria and you would like to do fund management for a fund in Nigeria, there is a group in town in Seattle called Capria.bc, which is essentially an accelerator for developing country fund managers. And so they train people to be fund managers in developing countries. So it'd be probably worth having a conversation with them and just seeing what the opportunities are. I haven't really been paying attention to them since COVID started. But the thing that Martha mentioned, the pledge program, tended to have an Africa bias, and they were bringing like 6 out of 8 companies were out of East Africa typically, and they'd bring them to Seattle. But they were having enough problems with that they've devolved into the Africa Eats program that they're putting together a holding company in Africa out of Mauritius. And so there are opportunities that are going that way. We do run the Transatlantic Angel Conference as well, which is trying to get people to be aware of Europe and US together. So that's running in parallel with Seattle Angel Conference right now. Any other thoughts or questions? You're on mute. Precious, you're on mute.
Every time. Sorry about that. Are the SAC investors exclusive to Seattle-based startups for the most part?
No, ever since COVID, we've been virtual and it's been North America wide. But I am exploring the question of whether SAC 26 or SAC 27 should be in person. And so when we do that, we will probably drift back to the northwest corner, right? You have to be within 4 to 8 hour drive of us to be in our program, because we expect you to come see us every other week for 3 weeks. So, and we want to go see where you work and talk to your customers in person and all of that stuff, which right now we're doing everything virtually. And if we go back to in person, there's a bunch of things that change with that.
But with the transatlantic they're broader where they take companies from.
Oh, and anywhere in North America, all the way from, I've been saying from Alaska to Armenia, which is not true because we had a Georgian company and that's further over. So from Alaska to Armenia plus Azerbaijan.
But what about an African country?
We
Company.
haven't quite figured out the legal investment mechanism. So we would invest in an African company that had a US or European entity that we could put the money into. I think that's really, this is a question that I leave up to the fund manager. So like Chris Ann is one of the two SAC 26 fund managers. And I would say, Chris Ann, how far are you willing to pay attention? And sometimes it's a broad number and sometimes it's not. And we change it from round to round. But mostly North America for SAC and mostly Northern Hemisphere, not counting Asia or transatlantic. And we do have a trans-Pacific one that's trying to get up and going. I have a meeting with the guy that's working on that later today. So if we can figure out how to get Singapore and Southeast Asia to play, we'll do one that direction.
We have had Canadian companies too.
We have several Canadian investments, in fact. Yeah. I think the SPAS company is a Canadian company. So there's an example of things.
Thanks, John. Any other questions before we wrap?
Margot said that she was, no, it wasn't. It was Natalia. I don't see Natalia on here anymore. Natalia was interested in the donor advised fund as a mechanism for learning how to do angel investing. So one of the things we could do is run a workshop series about how to do that.
Great.
We will do, we've had enough conversations that we will do a workshop on how to structure your angel investing to limit your liability and tax overhead. And so we're going to, that I write an individual check and now I'm liable kinds of things. And then I get all these crazy K1s and I have all these things I have to deal with. What can we do to like squeeze that out of the system so that we turn right instead of left and get no more K1s? So
Oh man, I'll
I have a
attend
plan.
I want to go to that.
Yeah. I'm a little bit slow about getting it done for SAC 25, so we'll see if I can figure it out. But
No worries. We'll be here when you figure it out.
yeah, I fully intend to dump all of my personal investments into the middle of something else and get rid of all the K1s.
Gotcha. Well, everyone, thank you so much for joining. This was a fantastic kind of lunch and learn. It was great to meet all the new faces. Love seeing faces that we're working through with SAC 25 and reunite with previous investors that we've had. So just want to say, really appreciate all the time, the energy, the input, and the conversation. I will be sharing my slides on slideshare.net, where you can find this version and all of my other previous versions out there. So yeah, that will be all up there for you.
Thanks so much for putting this together.
Thank you guys.
Oh yeah, you bet. Thanks for coming and making it part of the reality.
This is
Thank you so much.
Thank
This
you
is
so much.
fantastic. Thank you.
Great, thanks.
Have a nice day. Bye.
You too.
Thank you.